Now, initially, I mean, naturally, I'm going to expect, right? I want to see this thing like kind of be a catalyst and then send us up higher, okay, towards this wick high up here. All right, so that would be nice. So for now, I think this right here can 100% be a very good target. Okay, obviously just way too smooth, and this would be on a Model 3 type of idea, going against those who have been making money to the short side, right? Like I said, with the help of the 10 a.m. volatility, I would expect price to revert to at least at the minimum these highs that were left behind here, right? Because once again, guys, it goes back to what I teach you in almost every stream. All right, anytime you have that first directional move of the day, it doesn't happen every single time, but I'll say about 80 to 90% of the time you'll see this happen. You look for that first directional move of the session, right? If there's an 8:30 a.m. news driver, okay, you can look at that price leg, or if it's like 9:30 opening, something like that, right? You want to identify the first significant swing point that was formed after that drop down, and that is right here. And what is that going to be right there? Pray. Okay. Now, can we long it on a Model 3 up into the highs? Yes, but the model actually has to be there. And if it's there, like I'll know. Okay, but if it trades down into here, I would just view that as reaccumulation of longs, right? To send us above the highs. So this to me looks good to go up in the buy side for sure. That's so pretty good. I would view this as reaccumulation of longs here, right? And we'll see if this body can close inside of that inversion. It really needs to leave this lower half open though. So yeah, this looks good to me. Okay. Notice how it comes up off of them immediately, like I said it would. Institutional order flows that gap. Now we need to see really strong candles to the upside. I don't want to see it spend too much time down here. You will see a real impulsive swing to the upside here now that it institutional order flow this gap. Okay, don't really want to see it playing around here too much, especially since we have this inversion here. So you want to see it really create impulse candles straight up to that buy side liquidity. All right, that's what I'm watching right now. Okay, I said that was reaccumulation of longs, and there you go. That's exactly what you want to see right there. Boom. Okay, now you need to see this really pick up in speed here now that it just changed its stage delivery above these down candles right here, okay? Right, your stop will also be at break even because you understand it shouldn't redeliver that gap because we have an inversion plus down candles, right? And just to respect that and complete the move up the buy side. Very simple. All right, there we go. Boom. There's full take profit hit. Bang. All right, good evening, everyone. I'm sitting down here to do a full in-depth daily review. The most simplified and most effective tutorials in the entire industry. You're given all of that right here. All right, and it all, once again, okay, when we dive into this, it all goes back to the same exact four elements that I've been teaching you guys that lead into a high quality model number 3. Okay, and that is number 1, higher time frame key level. Okay, you establish that from the daily, weekly, or hourly chart, right? Then number 2, obvious opposing liquidity. Number 3, you look for that light bulb displacement. And number 4, last but certainly not least, time. Okay, so we're going to dive into these 4 elements and really incorporate that in today's price action and show you why today's model number 3 was so obvious, right? And how I was able to make $1,300 as a result of today's model number 3. So going up to the daily chart, first and foremost, the higher time frame key level that I was utilizing, right? As you can see here is this small little daily inefficiency, right? It's just one of two things that I'm really looking for, liquidity or inefficiency. In this case here, I had this daily Fairvalue gap. Okay, if you look to the left side of the chart, okay, we had also this volume imbalance. This is one of the most precise PDA raised from the daily chart that you want to be utilizing. Okay, so I'm extending that forward. You can see we come down and tap both of those levels and already established bullish market. So it's going to make sense for me to really, be favored on longs when we're already in a strong bullish market at the moment. Okay, so as we drive down to that higher time frame key level, I'm looking for the next 3 elements that I just went over with you guys. Okay, when hunting model number 3 to the upside here. So dropping down to the 5-minute chart. Okay, as you can see here, I have an eyeball annotated at these relative highs. 2 specific reasons why this was such a high quality model number 3 and like that obvious opposing liquidity. Keyword obvious, right? It's because pre-market, what did we do? Since the London session, the previous session, and then pre-market, all we've done is offered price lower, 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 until we reach that higher time frame key level at a specific time, which I'll get into in a minute. Okay, but all you need to know right now is this here is so obvious because it's the first significant high that was placed in after this huge aggressive drop down. And this is exactly what you want to look for in a model number 3 because this is going to be the easiest target in the world. Every single time it's going to pay out like an ATM machine. Every single time. I mean, how many examples do I have to get on here and show you guys for you guys to open your eyes and realize how effective and how much money you can actually make trading this exact model from this simplified approach. You don't need to bring in Event Horizon. You don't need to bring in whatever else. You don't need to bring in all this other extra stuff, okay? Because at the end of the day, simple, especially a model like this, makes money. So, obvious opposing liquidity, right? It's the first significant high that was formed after the large move, okay? And also, another thing that makes this high quality, let's drop down to the 1 minute chart. Let's find that 930 opening. Okay, that's right here. So that opening price here, right at 930. Okay. Extend that forward. What's the first high that was formed after 930? Okay, it's not a hard thing. Find the 930 opening, go to the right. This here obviously is the first high that was formed after 930. So not only is this model number 3 buy side, but it's also time-based liquidity because it's that first high formed after 930. So that automatically makes it more high quality. Okay. Now, the third thing we're looking for is light bulb displacement. Okay. Do we have that? Well, first of all, what's the time aspect here that leads into the fourth element? What did that tell you guys? You're either going to be utilizing with Model 3 that 1030 to 1210 hunting window or a macro. It's one of those two things. Either a macro or a 1030 to 1210 hunting window is going to be used for your narrative for model number 3. In this case here, what did we use? Where did this reversal take place? Going against the grain to complete model number 3. Above these highs here, that's the completion of model 3. 950 to 1010. Okay, that's your classic 20-minute time pocket macro in price, and that's what we're utilizing for this long here today. So the macro began the move here with the reversal. What does it do? Drops down to that higher time frame key level. Remember what the shaded area was? This blue shaded area? That was that daily volume imbalance. Okay, and while we're doing that, we're also sweeping sell side liquidity. Okay, so now we have all three elements here. Okay, we have an obvious opposing liquidity. We have a higher time frame key level that we drop down into here, and we have a macro. Now, what's the last missing piece here? Light bulb displacement. Okay, if you're overcomplicating it thus far, okay, I promise you, you gain a little bit more experience and a little bit more reps watching this stuff, and you're going to be an absolute beast trading this as long as you don't quit and you just keep on going forward. Okay, light bulb displacement. Now, this was a little bit tricky because, you know, initially it just rose up. It was kind of trading sideways, and it rises up again, kind of just creeping up above the high, but keeps wicking off. So that's not the type of stuff I want to see when I'm talking about light bulb displacement. Now, the real light bulb moment was where I entered. I want you to look at this fair value gap right here. Okay? Every time you're hunting a model number 3, you always want to be referencing these opposing arrays. Okay, in this case here, as soon as we get this right here, right? What's happening? Two things. We're leaving the consolidation here with aggression, creating a fair value gap right here. See that? But we're also closing above an opposing bearish array. So this bearish fair value gap that was formed there, what do? We just smash straight through that with no regard. Okay, and now that I have that light bulb moment, why is it light bulb? Right? Once again, because it displaces suddenly and creates a fair value gap and trades to an opposing rate. So that's what makes it a light bulb moment. So what do I do after that? It's very, very simple. No overcomplication, nothing, none of that. Okay? I wait for the next little retracement, okay, and do some type of array. It could be an order block for value gap. In this case here, you can see here, if you zoom in, we had this bullish for value gap. Price trades down into that. You want to long that and put your stop loss below the down candle right here, okay? And what are we targeting? Well, the high's up here. Now, as you're going to see, if you zoom out, you can obviously see price traded a lot higher than that. Are we worried about that? No. Why not? 30 handles. I don't want to get too loud here because it's late at night. 30 handles. Okay, I caught 68 handles today. Just on this offered 68 handles. Okay, but do you even need that amount of handles? No. If you can consistently get inside of this market and carve out a simple, modest 30 handles on a consistent basis, you do not need a job. If you master that's done. That's it. You have your bankroll. Okay, and you have your consistency, you have your system, and you block everything else out. Okay, you find the model that suits you, which this one right here. Obviously, I don't think anything is more effective than this one, right? You simply carve out on such an obtainable and modest, especially when you're starting out. Don't try to go for too much. 30 handles a day is all it takes. Okay, even 20. You consistently make that, that job's gone. You don't need it. Yeah, there's absolutely zero reason why you would need to work a job if you're consistently gaining that inside of this market. Okay? One contract, 30 handles, right? In one trade, that's someone's paycheck right there in one trade. Okay? In this case here, on this model number 3, okay, assuming that you got the entry right here, where's the entry? Right here, 19,236. Up into the high for model number 3. Obviously, you can see that this particular example offered 70 handles on a model number 3. Okay? This right here is your golden ticket to freedom. It is. If you master yourself, right? You conquer and bring out every single thing that's, holding you back to light, and be honest with yourself and work on it every single day. Show up every single day. Put in the work. Submit to time. Be patient for your opportunity because it will come eventually. That's it. You've arrived. Okay, now I want to ask you, on a model number 3, 70 handles right here was offered. That's $1,400. That's how much I made today. And I want to ask you, if you can consistently catch model 3s like that, understanding the dollar value that's attached to it, you tell me, would you need a job? Okay, I'm sure most of you are going to answer absolutely not. Okay, so hopefully this serves as some type of inspiration for you guys. Okay, another example of the repeating phenomenon in price. It's the same stuff every single week. And that's about it, guys. I'll see you in the next live stream.